When you buy a stock, you're the one person on earth who's willing to pay more for that than anyone else in the world at that moment. Like, that has to be true for you to purchase a stock. You're willing to pay more for that than anyone else in the world thinks it's worth at that moment. If that wasn't true, then you wouldn't be able to buy it because somebody else would have paid more and it would go to them instead of you. The bid price would be higher. So if you're not willing to pay more than everyone else in the world, you think you know more than 8 billion other people do about that asset at that moment. How the would you have your timing perfect on that always?
Attention, current and future entrepreneurs. My 12-week entrepreneurship-focused masterclass starts in a matter of days. I'm Derek Moneyberg, and we opened up a few more spots for one-on-one interviews. If you've ever wondered what it's actually like when you become a Moneyberg client, I'm inviting you to claim one of these limited spots right now. If your application is approved, you'll join my head coach for a strategy session where you'll be able to know more about you, your goals, and how to be able to leverage our experience to help you reach those goals even faster. After the call, if we think you'd be a great fit to be inside one of our programs, we'll invite you to become a client. If you're serious about your success, click that link, request your interview, and secure your spot before we end this opportunity.
You know, I'm not the most artsy type guy, but somebody in here, somebody that's more into music or dance or something like that, I think you'll understand what I'm going to say. Is like there's a tempo or a rhythm of what's going on, and I don't want to miss a piece of information. I don't want to miss the tempo of the hysteria, or the tone of the. I want to understand how is this developing moment to moment. That's in the background noise, and I got to read these financial statements to understand where are the assets, what are the problems, what's going on, and shit's moving. Prices are moving. The government's implementing new propaganda campaigns. There's a lot of moving pieces, and like if you go disappear for 10 hours and come back, now you got to play catch up. You got to play catch up instead of just being, this is the ongoing, droning, awful sounds and noises where they're playing their horror movie music on television. Bid lockdown, day 111. You have to feel the tenor or tempo or whatever the right word is, musically. You got to be there and be in the mix of the stuff. And I found that much more useful during the peak hysteria moments. I found that much more useful. That I got to understand what's going on. I don't even want to go to sleep and play catch up. I suppose how does it feel? What's going on? Let me read these documents. Breaking news. Blah 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 blah. Gibber. Stay inside for the rest of your life. You should sleep with the mask on.
And what was the change in feeling that you had when you realized it was time to move from shorting the market to buying?
I don't know that exact moment, and if I think about that, if that pops in my head of like, oh yeah, I'll come back to it. But and I don't want to just say something because it's a useful question. But I don't remember that exact moment at this moment. But it's 4 years ago this is happening, but there's. I think a lot of that is related to do you see stability in funds, in money management funds, versus are they still, are they trying to actively deleverage? Well, shit's going down, which causes more selling and more price drops. But are you going to have more forced liquidation in the funds where they're getting close to, margin calls or being, forced liquidations because they can't provide more liquidity. They don't have more capital to put in. So I think a lot of that judgment was around that topic. That
stability of money market funds.
When you have those cascade effects, when the big funds get sold off, or medium funds get sold off, and then it creates more forced selling in the next one, and it creates more forced selling in the next one, and the prices. There was a time where, all at the same time, oil is going down, all the commodities, gold, platinum went to $600, gold is going down, platinum's going down, oil's going down, all the stocks are going down, everything is going down. And usually somebody, maybe they're selling commodities and buying stocks, so they're selling stocks and buying commodities. When you see everything going down, that's the funds, those are the assets that they had, that everything is getting sold through those forced liquidations. And then, then other, individuals, retail investors look at that and they panic and sell shit too, because they don't understand what's even happening. And they're just like, oh my God, the price is going down so quick. We better sell too. So when you have that big downward buying or selling pressure and, limited buyers to keep the price in line, then you have those big days. And so I think when you feel like, oh, this is close to selling off, that's close to selling off, this fund or that fund is having problems. When you hear those little things getting echoed around, you're like, let's be in that a little bit early. And then when you start to feel like, maybe some of the hysteria is died down for a moment, then, you don't want to be in those positions. 'Cause when the market goes back up, those, inverse leveraged ETFs are going to go against you. And, it can take quite a while to unwind that if you don't want to accept the losses that you're going to incur. So then you have to keep putting, every time it goes up, you have to put in some more money and some more money and some more money and some more money until eventually you have a good down day again and you can get back to breaking even, but you have a lot of capital tied up maybe in the process, and that's not a fun spot to be in.
Are you looking at where's the optimum time to get in and then buy so you can get that?
You don't know what time. You don't know. You can't know. No, who knows?
Even with all that information
No, but what do the financial statements tell you? The financial statements tell you what's a balance sheet, the assets and liabilities. They'll have some disclaimers in there about future performance that, this thing could f up our future performance. This thing could f up our future performance. The other thing could f up our future performance. So you have statements like that in there. An important one I think to read is whenever you hear about projections or estimates, then you'll see a little asterisk or a symbol of some kind next to that. And I think a lot of the evil is done right there. It's like, all right, go look at the footnotes. Go look in the back, like, what do the projections actually say? What are they based on? And if they're estimating some preposterous growth numbers that are not in alignment with what's been happening in that industry, then that's probably pretty informative of like, okay, they're basing these numbers on an estimate, but the estimate is nonsensical, and probably not a good idea to with that.
There's also a point where you said there was some, I think it was maybe Macy Ridge, where you looked at it, it was like 4 something. And so there's like a good, it could go lower, but you're already looking at it, hey, this is probably a good time to buy. Is that what's going through your head at that point?
When you buy a stock, any stock, whoever you are, at any time, good market, bad market, whatever's happening in the market, when you buy a stock, you're the one person on earth who's willing to pay more for that than anyone else in the world at that moment. Like, that has to be true for you to purchase a stock. You're willing to pay more for that asset than anyone else in the world thinks it's worth at that moment. If that wasn't true, then you wouldn't be able to buy it because somebody else would have paid more and it would go to them instead of you. The bid price would be higher. So if you're not willing to pay more than everyone else in the world, you think you know more than 8 billion other people do about that asset at that moment. How the would you have your timing perfect on that always? Like, how would that possibly be true? It's not true. It can't be true. You can get lucky on occasion. Somebody bought it at the lowest bid ever. The other thing is when you see whatever the 52-week low or multi-year low is, that might be on very thin volume. When I buy something, I might want to buy 50,000 shares, 25,000 shares, 50,000 shares at a time. I have some positions, 500,000 shares of things that, the whole daily volume might be a few million shares. So if you wanted to sell if you wanted to liquidate a position, that you might be moving, 10 or 15% of the whole volume of the trading day. So you're going to change the price. You're going to put downward pressure on the price to sell that many shares of something if it's not a high volume company. So some of these small cap stocks, if you get large positions in them, or not even large, but relatively large positions for a consumer for a retail investor, you're gonna be playing with the price on both sides. When Buffett buys something or sells something, he needs there to be time in between, because he buys so much of something, he's changing the price up when he buys it. And if he sells something, the price is going down when he sells it, because there's so much money. And it doesn't make sense for him to buy anything unless he has large positions, because he doesn't even want to think about it or pay attention to it unless it's some number of billions of dollars. $1 billion ain't shit to him, or to Berkshire Hathaway. $1 billion ain't shit to him. So, if you try to buy a company like Nordstrom at the moment is worth $3 billion. So for him to you have to buy the whole company for it to make sense for him to give a shit about it. So to a Pavern person like myself, who's only looking to make 10 million or so on the stock, but what does Buffett care about 10 million? He doesn't have time to think about 10 million. That's a rounding error on any particular day. He doesn't have time to think about 10 million. I'm not saying that to be cute. If we said, if the guy's worth 130 billion or so, and the stock market goes up or down 3%, which happens all the time, then he's up 3 billion or down 4 billion, up 4 billion, down 4 billion in a day, 3.9. So you don't care about $10 million. You don't have the time to think about that. And even with options contracts, there's times where I've been aggressive in selling puts or whatnot. You start changing the price of the stock because the brokerage houses, the market makers, which is Citadel, the market makers and the options contracts, while they're selling you the contracts, they might buy or sell shares to counterbalance their positions. So to be, closer to neutral in their positions in their book, and so you can change the stock price some days. If you sell enough put contracts, you can change the stock price, where they'll buy some of the shares to offset things. And we see that happen in real time. That it's not even huge amounts of money. It's a few $100,000 can change the stock price, and some of those companies are a little more thinly traded.
Some of the most impactful things I've gained so far are the importance of self-awareness, importance of knowing why you're doing what you're doing, importance of establishing a goal, understanding why you want to achieve it. A lot of the homework has been a lot of self-reflection, documenting your motives, your attitudes, making a list, committing to yourself, right? Creating habits and getting rid of habits that you don't like that are going to take you off your goal. So this course has been very impactful for me in making another step of commitment, re-energizing myself, surrounding yourself in an environment where you have to really take yourself seriously. I appreciate the guidance, the direct talk, and the support and guidance you've given to us.